Welcome to another edition of our ongoing interview series with members of our community. Today, we're really excited to have Eugene from 3Jane. So 3Jane Capital is a Moscow-based quantitative trading firm who has been really using Hummingbot as well as participating on Hummingbot Miner. And I think they're a really good example of the kind of what we're trying to do with Hummingbot, which is to create software that allows anyone in the world to do what historically only people on Wall Street could do. And I think 3Jane is a great example of that because they're based in Moscow, but they're participating in crypto markets all over the world using software like Hummingbot as well as what they've developed themselves. So maybe Eugene, let's get into it. Can you tell us more about how you got into crypto and the origin story of 3Jane?
Yeah, sure. So I don't know, about maybe 2014. Well, I'm a software developer, so I have a long career as a programmer and like CTO. About 2014, it's like in the middle of my career. I got a bit tired of like selling time for money. I'm sure you know how it feels.
Yeah.
So I started reading around and thinking like, what else can I do except just doing the professional career. So I started getting into investing, trading a little bit. I started trading Forex. It wasn't like an ideal result. I made money in the end, but after some time I realized how much risk I was taking. I was basically betting, I don't know, like my whole capital, which could collapse to zero, and doing maybe like 20% a year or something. So it wasn't a good game.
Did you were you doing quant at the time? Do you have your own algorithm?
No, not back then. I was managing a portfolio of I don't know if there is a similar thing like in the worldwide forex markets in Russia. There is a thing called PAM account, which is like when some other small people are managing portfolio of like forex trades, and you can invest in like in these guys.
Okay.
So I managed a portfolio of portfolios.
Okay.
But the people who usually run these spam accounts are taking like unreasonable risks with their capital. Yeah. So after a while, I stopped. Still having the profit, but it was mostly luck, I think. So I started reading a bit more. Time passed. So by about 2016, I was a little bit more aware of what there is in the world, what one can invest in, what risks are there, what profits are there. And it turned out that I didn't like very much the opportunities that are generally available. So it's like, well, stock market is a very like specific game, which has huge drawdowns, and you either pick something or you see it on like 5% a year, aside from 2021, apparently. Like bond market is even more boring. Real estate, it requires a very certain kind of expertise, which I don't have. Commodities are not very popular outside of US. I think it's like not very liquid, rather. And Russians don't have that much of an access to outside trading world. We can't access most of like brokerage accounts and stuff. So it was hard at the time. And then I started reading about crypto. It was already pretty active by then. So I missed the whole initial pump and like all these 10,000 Bitcoin pizzas and everything. And at the time, I'm also a gamer, so I play computer games. And I was trying to justify building myself like a $4,000 gaming machine or something. So I thought about it and I'm like, okay, there is a scene called Ethereum. It was like $6 per token back then. And I'm like, oh, okay, I'll mine it. I mean, I'll buy a video card for my gaming PC, which can both play games and mine Ethereum. And I went with it and built the machine. I mined the Ethereum, and if you ever mined, you probably know that like you can't just get into mining and not get very technical. So you start configuring all these blockchain nodes, like optimizing parity versus like gas or whatever. So after a couple of months of that, I got pretty familiar with like how it's working.
This is 2017. or
It
2016?
was late 2016. Yeah, before the huge pump. Yeah. So then I understood the blockchain technology pretty well. It was like maybe, I don't know, maybe September 2016 or something like that.
Okay.
I mined Ethereum. It started growing. It was like something like $9 by then, or maybe a little bit more. I don't remember. So I made like, I mined the whole cost of the machine by then, and I made like 50% profit on top. I'm like, okay, I like the game. And then the ICOs started to come in. There was like Golem. Golem, I think, was the first one. There was ICN. So like, okay, what's that new thing? It's like startups, but you don't need to be a venture capitalist to try it out.
Yeah.
And I'm like, why not? I mean, I'll throw $1,000. Like I saved the initial, like, I don't know, 10K or something from my salary as a programmer. So I invested in Golem. I didn't do much for like half a year or something. Then I invested in ICN. That went a lot better. There was a lot more of that. So like for the first half of, I think, 2016, I started investing into different projects, trading on BTC a little bit. I don't know, there is a story. It's the name of the token is a little bit obscene, so I don't know. You can pick it out or something. But there was a token called Fuck Token. I don't know whether you heard about it or not. They had a nice motto. They said like it was a token like, you know, like when you can give someone a tip on Reddit for like a good comment or something.
Karma.
Yeah, and that was like before the Reddit tokens, and they said something like a token that you can finally give a fuck with, something like. And I'm like, okay, guys, I like it. So I gave them something like $50 or something, just for fun. It wasn't structured in any way. I just went to Slack. The guy gave me his Ethereum address, and I just sent him $50.
Yeah.
And it grew 1,000x, like in half a year or something. So I sold it like for $50,000, and I was like, okay, that's crazy.
Yeah.
Completely ridiculous, but. It was 2017. So I flipped a bunch of ICOs. I traded manually. But then 2018 came. You know how that ended for most of manual traders. So I lost a significant portion of the money I made. And then I stopped trading and like, okay, so that thing doesn't work anymore. What do I do? Also, the psychological load of all of that was pretty harsh. So I'm trying to, I read by that time like a couple of hundred of investing and trading books, including all the market wizards and stuff. That would actually be my first advice. Read a lot, because most of the stupid things we do as investors have been discussed already. And there are solutions to that.
Is there a book you would recommend to people that they can start with?
Depends on where you are. Like in the journey. The first book I usually recommend is Market Wizards.
Market Wizards? Okay.
Yeah, there are like 2 or 3 of them which are actually quite good. That's for the general, you know, overview of what's there. Because there is a lot of people and they talk completely different strategies, ideas. You can't do most of it, but you at least understand what exists. It opens your eyes a little bit. There is no crypto discussions there, but anyway. Most of the things we do have actually been mentioned in the book, so it's a good overview. There is the usual classics that I don't know if I can pronounce it, not being a native English speaker, like Reminiscences of a Stock Operator.
Oh yes,
I've probably heard it. That one it's just a nice story. It's a very good read, and it gets you into the mood of how that works. And it's pretty amazing that it was written like 100 years ago. And
I do like Market Wizards a lot too. And actually, the book that I think a lot of the quants have been reading recently is called Advances in Financial Machine Learning.
Oh I was going to come to that. Lopez is amazing. Yeah, he's like the main guy. In between of that, like before you get into quant stuff, there is also like a psychological stuff, which I would call very important to understanding of how bubbles develop and why people like run away from markets. Why, for example, the liquidity has dried up like 100x in 2018. All of that things. What to expect generally. There is a very nice book which is not available in print, I think. It's a combination. It's an audio book on Audible. It's a combination of I forgot the name. Let me, I think, look it up. It was a very important one for me, at least.
Okay.
Oh, yeah, I found it.
Oh, okay.
So it's called Extraordinary Popular Delusions and the Madness of Crowds.
Okay.
By Joseph de la Vega and Charles Mackay. I can send you a link after if you want. So it's a combination of two books. You found it.
It's a pretty old book, like 1841. Is that the book?
It's a combination of, I think, 2 or 3 books. One of them is like 400 years old or something. Okay. And another is about 150. And it discusses how like the first stock market in the world worked in Amsterdam, I think.
Okay, yeah.
And the other one discusses most like ridiculous world bubbles, like the tulip money, the Southeast bubble and stuff. Yeah. And when you hear it, you realize how little has actually changed. Because, like they had stock options in Amsterdam in like 1604.
Yeah.
I was like, what?
Yeah.
So it's pretty complicated.
Yeah. No. Okay. So for me, I worked my first 7 years in regular finance, in Wall Street, just creating CDOs and MBS and all these things. And I agree with you. Like, everything is, as much as everything is changing, everything is exactly the same. Like what we do in crypto today is no different from what I used to do, 20 years ago on Wall Street, and probably 100 years ago what people used to do in Amsterdam and.
The details change, but the overall like ideas are still very similar. Yeah, it's very strange. Right. I didn't expect that.
Yeah, cool. Now, I'll add this book to the recommendations as well for our listeners, because I think some of this information, like Market Wizards, this memoirs of kind of like extraordinary probable decisions and madness of crowds is definitely something. That, it's like this is like really the fundamental stuff, because actually I think this is actually what the important things for quant traders to know, which is
definitely
the technical part is that's actually the easy part. Learning this, which is like it's more like the art and the theory of how finance works, that's actually the harder part.
Yeah, because like market is like, there's a lot of regimes, right? So for example, if you traded, like if you developed your quant strategies in like beginning of 2017, basically whatever the hell you do unless you short would have been successful.
Right.
But if you don't know the background, if you don't know all this history of how the markets develops, how the bubbles develop, how people like react to that and what happens after, which I didn't know in 2017, but now I know a lot more of it, you don't know what to expect.
Yeah.
And when you don't know what to expect, you lose like 90% of your money in 2018.
Yeah, definitely. So moving on a bit, so tell me, how did you end up starting 3Jane Capital?
Yeah, so basically that's exactly how I didn't end up starting it. So I lost a lot of money and I started to trying to distance myself from manual trading. So I went into more like quantitative and mathematical stuff. So I'm not a good mathematician personally, but as a software developer is a little bit easier. So I read most of the, like traditional stuff like Pardo, which tells you about like wall forward optimization, all that stuff. We did a bunch of ridiculous things, like, I don't know, spinning up a cluster of 1,000 machines in the cloud and, walk forward optimizing like thousands of or millions of parameter combinations and just picking up the good ones and trying to run them, all of that stupid things, which obviously doesn't work, and to understand why you also need to read as well, but we didn't know that. So we've done a bunch of that stuff. The company was called a little bit different back then. I actually had like 3 trading companies doing different things, but I then aggregated them all together into 3Jane. So after that, like the first stupid bunch of ideas, we went into machine learning and tried to apply that, where the Lopez comes in, which like his book is probably the best that is available on applying of machine learning to trading. I read it like maybe like 16 times or something before I understood what he actually says, because he's not very like clear about his ideas.
I know.
Yeah, but they're very good. And what he basically says is that like don't use machine learning for trading.
Right.
It took a while to understand, but he says use it for like understanding the world, for modeling the reality, and like trade without it. You don't need it for execution. You don't need it to like predict the prices. Usually, you need it to optimize some other things. So we've spent, I think, a couple of years doing machine learning. We've been like moderately successful, but not. I don't think it's paid for the team. So it was like on the edge. Of course, machine learning guys are expensive, and I don't have too much capital. I have some, but like not billions or something. So it was hard to pay for the expensive team from profits. Then we got disappointed a bit in that, and I understood finally that you shouldn't just try and predict the next bar or anything, that it doesn't work. And I went into classical stuff instead, into like statistical arbitrage, mean reversion trading when the relationship is stable, trend following, and market making, obviously. So we've been more successful with that, because apparently people who write all these classical articles actually know what they're talking about a lot more than like we thought we know. So another advice is to read like the science. If you want to be quantitative, read Avellaneda, read like Lopez, read Stoikov, read all these guys who wrote about the kind of strategies you're trying to employ. Not the new guys, preferably, like the older ones, like 10 to 20 years ago, unless you understand what you're reading. Because there are like nuggets of ideas in the new science, but unless you know very well what it's based on, you can't figure out whether it's false or not. And most of them, and we are not the first who tested it, but we tested hundreds of them. Like about like 300 out of 301 are just false. It's false positives, like gotten through false scientific method. So you don't get information.
I think the one thing that people out there don't quite realize is the way that professional trading firms make money. It's not by it's not by coming up with some model that works better than everyone else's model. It's really about just having like lots of connections to lots of different trading venues. And so it's like anything that happens in one venue, it kind of creates like either arbitrage opportunities or opportunities for you to like provide liquidity in one place while hedging in another place. And, like essentially entering into a advantageous scenario where whatever happens to the market, you're still gonna make money no matter what. For me, I think machine learning is best used to almost like to identify those opportunities where you can actually just make money easily, risk-free, with no risk whatsoever, instead of trying to like, build some type of like black box, golden goose type model that is going to spit out infinite profits, which never happens. I think what most quant funds they've set up is it's like it's like a machine to actually like kind of like to set up these trading opportunities. So and so it's almost like usually it's a human plus machine. It's like the machine is the one that identifies something that might be an interesting opportunity, and the human is the one that kind of really actually sets up the trade, sets up the bot, and runs it for a few days and assesses whether it's actually profitable and should keep on doing it. But it's I think this is actually one of the big lessons that I think we always struggle to teach our users, which is don't try to create some perfect algorithm. Just try to find some easy arbitrage and just ride that for a few weeks until you exhaust it and then move on to the next thing.
That's one way to go about it. Like for us, we don't run pure ARP. Maybe for now, but it's a very competitive thing, at least like long term. You're right that you can find, if you like look everywhere, especially if you don't have too much money, and if you look into some obscure places like new exchanges, like decentralized exchanges and stuff, they are not perfectly like efficient for sure. So you can, for like a short amount of time, you can definitely profit from that, but it goes away pretty quickly.
Yeah.
And you can't trade too much money there. So instead of that, we went with a combination, of like widths and depths. So we look around, we identify the opportunities, but we also dig a little bit deeper than just the plain stuff that's written in the article somewhere. So
right.
we both have like a mathematical advantage somewhere and like a speed advantage, for example, right? As we are a small team and we can't outcompete on speed alone. So we trade like in like low milliseconds, for example. But I know people who trade faster and they outcompete us.
That makes sense. Yeah. Actually, so that's a good question. So in the trading market, there's small firms. There's like big firms, but there's also individuals as well. So like kind of like like where do you play and where do you not play given your size?
So let me formulate it. So as I said, we look for opportunities. We are connected to like most of the exchanges that have enough liquidity for us to do at least something. It's like there are not many of them, fortunately, maybe like 5 or so. Then we try to look at our arsenal of ideas. What stuff do we understand at least a little bit? For example, like optimizing for like sub-millisecond speed, we don't know very well. We can't do it like efficiently and fast enough to outcompete. So we don't like touch that like at least too much. Like some extremely complex math and like predictions with machine learning, we weren't successful, and we haven't been able to launch it. But we have found some ideas with okay, so to structure it, we do market making, statistical arbitrage, and directional mean reversion and trend following. 4 kinds of strategies. Well, you can call liquidity mining a 5th kind of strategy because it's not the same as market making.
Right.
So on directional side, it requires very little like math. Well, you need some Kalman filters and stuff, but it's for experienced people. It's very easy. So you do need a model to model the spread and stuff, but then you can just plot a line where you want to execute it, and it more or less works. So it's very visual and it's not complicated. But what you need is to understand how to see the opportunities where it will work. Because if you just go and launch mean reversion trading on BTC USDT, it will kill you in a day, like with our speed. So it does nothing. So you need to find like either markets or combinations of markets if you want to do like a stat urban portfolio or something, where the relationships exist that are conducive to what you try to execute. So it's more of like finding things that work in the ways that are convenient for your strategies than the other way around.
Right.
Same with trend following. It works if you find markets that trend.
Right.
So if you trade like euro, I don't know, then it doesn't work very well. Same goes for market making. Basically, like the less volatile the market is, the more volume there is, the easier it is to make. So if you just go and launch pure market making strat on BTC USD again, it will kill you very fast because the volatility is just huge. Unless you do something to it, right? You can start thinking about it. Okay, maybe I want to like try and catch those waves, like as it goes in. It might work, but it's not pure MM on the top of the book, right? As you said again, right? You can try and find like relationship-based opportunities. Like you can try and find exchanges which will pay you for trading. Like some of them subsidize their market makers, some provide rebates, some just give you like 0 fees and you can execute limit orders if you can. And I would say that liquidity mining programs that you guys run is actually that kind of stuff. It's like a subsidized trading. Because of that, it's a lot easier to provide liquidities in these markets because you can even trade it with a small loss, but it's still paid for from liquidity.
In general, I think my general advice for individual users is that look for opportunities where you're getting paid to trade. So it's kind of like whether it's looking for rebates, liquidity mining, lower fees, whatever. But basically, I think what's happening in the market is, for like the big players in the market, like the big hedge funds, are always going to have a huge advantage over the small players on the biggest markets, like Binance. Binance, USDT, BTC, USDT, and Binance is going to be a really competitive market with all the big whales there.
The futures, especially.
Yeah. And plus, and also those whales are trading with zero, basically not paying any fees, because they're like a very high VIP level.
No, they're getting rebates.
Yeah, they're getting rebates too. So it's like, where do small players have an advantage? It's really at the smaller exchanges, where they're willing to give you rebates, like smaller trading pairs. They're giving you like liquidity mining rewards. And so it's kind of like, for the big players, it's harder for them to trade on those smaller venues and be smaller markets because they have too much money.
No liquidity.
Yeah, no liquidity. And so that's kind of why there's a liquidity reward there. But that's kind of also why, like, for the smaller players, you want to play in those smaller ponds. If small fish go in smaller ponds and earn the rewards that help you kind of compensate for the risk of trading.
Yeah, that definitely helps.
Yeah. Well, so maybe on maybe like, so can you tell us like how big is 3J now in terms of like people or AUM or like how big?
So there is no AUM. It's a prop shop.
Okay.
It's we trade our own capital. Which we don't really want to disclose.
Sure.
In terms of people, it's a small team. The size varies a bit, but it's around like 5 people.
Okay.
We've been like, the smallest we've been is like 3, and the biggest we've been is like 12.
Yeah. Do you censor how much volume you're doing on like a monthly basis? Or?
So last time I checked, we did about like $1 billion on Binance.
Okay.
Last month.
That's pretty big.
It depends a lot on what kind of strategies you trade. If this month you traded like StatArp and MinRev, it's gonna be not a lot because there is not a lot of trading going on. Because some StatArp trade can last days, and if you just do like pure market making on the top, it's a lot more volume.
Right. Makes
sense. So it depends.
Right.
Yeah.
So how did you get involved with Hummingbot?
I think it was after. We realized that machine learning, like applying it directly to trading, doesn't work very well. Actually, I think it was a funny story. I went on vacation, I think, for a month, and I said, okay, I'm fed up with this stuff. Let me rest. And my co-founder, actually, he's like, okay, I'll try something different. And he does most of the technical stuff, so he doesn't do the research, but he does a lot of the software things, like the execution optimization, all the platform and stuff. So he's a very great software developer. And so it was understandable that he went into like things that are already available, and you can play with them as a software developer, where you don't need to invent the math for that. And he found your guys basically. He found Hummingbot and was trying out the grid trading ideas, some of the market trading ideas, the pure MM, and experimenting how does it work. And I think after months of that, I recovered somewhat from our machine learning experiments. And he came to me and said, look at that. I think that I won't disclose the strategies, but he found a situation in a combination of markets where your strategies in Hummingbot actually are profitable. And he showed it to me, and I'm like, okay, that makes sense. And we started applying it, and then I started seeing the inefficiencies in that, and I started getting back into research. We improved how do we model the spreads and stuff. But the general idea, he just found just clicking into Hummingbot and looking at markets. And then after that, we actually understood that math and trading, it's not for trading, it's for optimization. You come up with ideas that don't require mathematics most of the time. They are you can explain them with words, and they are clear and understandable. Where you start requiring mathematics is when you want to execute them in a not stupid way,
right?
Somewhat optimal. And finding that optimum requires math most of the time.
Cool.
Yeah.
Oh, so did you guys are you guys using like the off-the-shelf Hummingbot strategies, or did you kind of customize your own?
We started using the off-the-shelf one. We traded pure MM for a while. Well, we fiddled with parameters, obviously. Then we started to want to model differently the mid price. So there is an opportunity. So we still use the Hummingbot, and there is an opportunity to extend some parameters on it with like external files. So we coded a Python script like with our own mass and remodeled the mid price, but then traded Hummingbot around it with Hummingbot's parameters. Then we started to want to go higher frequency because the off-the-shelf one gives you 1 second updates. And for some things, it works fine. For some things, you want to be faster. So the first one, I think we contacted your team and asked for the source code and like where is the parameters to go faster than 1 second. So we fiddled with that for a while. And then we found like the strategies we started using started to like being a bit different from what Hummingbot provides. We started to need like hedging on third-party exchanges to take into account like rebates and like the typical spreads between the price. So it became complicated. And when you get complicated, you don't have much choices except to go custom. So we started building a lot of our own infrastructure around it. We still use it for some stuff.
Okay, great.
For other stuff,
For us, actually, I would say it's definitely. I would say overall, we see a lot of professional training firms who've already built their own stacks, or it's hard for them to use it because it's more basic. But one thing we're planning to do is to kind of try to make it more customizable for these kind of use cases. So whether it's faster or more exchanges and whatever, overall, we're trying to make it more like more developer friendly, kind of like customizable.
Like for us, two things which prevent us from using it more is the speed. It's like we want it to be like on, I don't know, like 10 milliseconds or something, not a second. And the way you need to write strategies around it. So right now it's a bit involved. We built some of that, but it can be simpler.
That's actually the strategy piece is actually that's one piece we're focusing on right now. So we're trying to kind of like simplify how strategies work and just making it easier for people to like know how to use different parts of the how to kind of like do different things with strategies.
But what I like a lot is your docs actually. Like,
thanks.
Please keep doing that because you do like the basic strategies that you have, guys, are like, as I said, it's what you need to go and start with because otherwise you don't understand anything. And I actually learned a lot about market making from video docs.
Okay, thanks. No, well, that's actually funny because I actually think we need to significantly improve our docs because I feel like we haven't actually done a great job of explaining from a technical perspective how each strategy works. And so, like not just a flowchart, but actually like diving into the code, explaining how to do certain things. Overall, it's anyway. I'm glad you think it's good because, in my opinion, I think they're okay, but they can be improved a lot.
I mean, have you seen anything better?
Well, that's the thing. It's more like I think the secret to open source is really documentation, and it's more like I think now they really realize that it's like I'm fully committed to improving our docs to the point where it's the best open source docs period out there.
I mean, it's just you open your site for like Avellaneda or something, you read that, and then you go to read Avellaneda himself. Unless you have like a mathematical education or you're a PhD or something, well, like I'm not sure you will get any like useful information out.
Well, so what's interesting is that I think that there's so little academic literature out there on market making that and like for us, like I think we're actually going to talk to Avellaneda because like he's like. We have a few people in Argentina where he's based. And so I think we're going to try to talk to him and try to maybe get him to actually provide advice on how to actually set up the Avellaneda strategy.
He's one of like godfathers of marketing.
And I would think, I think he should have an incentive to actually evangelize and make his strategy more popular because, it's like.
I just remembered. There is a team when I asked, have you seen anything better? I actually have seen something comparable, but only in one place. There is a team called Hudson and Thames. I don't know whether you heard about them. They do this like ML FinLab. They basically, the idea they started with is they took Lopez's book, Advanced and Financial Machine Learning, and they implemented this like ideas he provides for research. And they went further and stuff, but one of the strong sides, we used their code for a while, and then we went custom as well. But the docs are like, they basically give you the same information that is in the articles, but you don't need to read the wall of formulas. So you might want to.
I am. Yeah, I'm looking at it right now. This looks amazing, actually. Yeah, I'm definitely gonna check this out. And, because especially it's machine learning, I feel like it should be open source, and people need more tools out there.
You need to pay them for like the interesting stuff, but it's still very like educational.
Yeah. Cool. So moving on. There's one more topic I want to cover because I know that you guys are active participants on our Miner platform. And actually, I'm glad you mentioned paying for Flow, because the Miner platform is really how we pay for the open source Hummingbot project to be sustained and supported. So overall, like, what is your experience like so far on the Miner platform?
It's pretty great. I don't really know like what's there to improve except bring more projects. I mean, it doesn't need to do much except actually like bring in projects on board that are ready to finance the liquidity you provide. The reporting is good. It's like, I don't know. It's great.
Okay. So in terms of, are you guys participating on like, because I know we offer it on Binance, on KuCoin, on Sendex, and also, we also find there's certain differences, right? There's certain trading pairs which we've had for a long time, like all the Avalanche pairs, the NEM pairs, and the RLC pairs, and then there's also these like newer ones that are kind of like shorter term on a Sendex where it's like the yields are higher. So like, how do you guys see? Do you participate in both like the lower yielding campaigns and the higher yielding ones, or how do you pick which ones to?
We don't look too much at the yield. We look at whether it can be traded in a way that's profitable for us.
Oh, interesting.
Because some pairs with high yield, for example, we can't find a way when a pair is like, it's high yield, okay, but it's very volatile, and you can't hedge it. What do you do? How do you provide and you need to stay on a tight spread because to get the reward. So for some things we figured out how to either hedge it or how to like stabilize it in a way that we can just mean revert it or something else, or some market making strategies which are workable. For some we didn't figure it out, and whatever the yield needs to be like huge for that kind of stuff where we can't figure it out.
Got it. I see. That's actually a really interesting lesson, though, because I think what you're saying is, if you just look at the yield alone, the yield doesn't capture how much risk you might be taking.
Because you need to look at risk reward, obviously.
And so what you're trying to do is trying to figure out how to like understand the risk of something. Either there's enough history where you know how to do it, or there's more you can hedge it, and then you can capture and isolate the reward.
Yeah, exactly. So you always compare like your risk and your reward. Your reward is basically your yield. Usually, for these things, like when I model it, I consider the like trading P&L like to be 0 or slightly negative. It's not always like that, but often for many pairs. And then like that's what you make. But what do you lose? Like you need to figure it out. And for some pairs you lose a lot. For some you lose a little. For like something else you can hedge it profitably. And that's very like individual approach. You need to figure out each pair and find a way to deal with the risk.
Great advice. So maybe one final question, because I know we're almost out of time. So one big thing that's probably happened in crypto, at least recently, is like the rise of these decentralized exchanges, like Uniswap, and now there's PancakeSwap and Pangolin, and all these other exchanges there. Have you guys started trading on those venues yet?
I traded on them for a long time. There was before like swaps. There was like Ether Delta, like IDEX, and a lot of other things. Now there are swaps. There is also how do they call it, like Liquid Swap on Binance, which is somewhat a decentralized exchange. For us, it's a little bit complicated. We try, but they're not very liquid, and the fees are exorbitant. And for most of them, they, I think, just recently came up with an idea of a limit order, and that's like the only order we use. So it's hard. There are some opportunities. Again, I know people who made like a ton of money using that. Well, not a ton, but like maybe $1 million for someone. It's a ton. For someone, it's not a ton. On exploiting like technical inefficiencies in that kind of stuff, without betting too much capital. So you basically stake, I don't know, like $10,000, and if you are smart enough, you can find opportunities to make it like into $300,000. But that's pure brains. So you need to. Most of them have been blockchain developers, so they understand the specifics of what's going on there.
I think this is actually consistent with what we see a lot of like professional training firms as well. It's like I think everyone's excited about the potential of DeFi and decentralized exchanges, but right now I think unless you're using only like less than $1 million of capital, it's hard to actually deploy capital at scale and know that you're actually going to make a lot of money, because a lot of the opportunities to make money are like idiosyncratic. So it's like at some point there's something happens and you can make like 10x, but if you wait around for a long time, so it's hard to like have a predictable set of profit. In DeFi.
There is also the usual like technology war. It's like people trying to front run the swap orders, and other people are trying to fuck the front runners up. Like developing, there was an article, I don't know whether you've seen it, where a guy developed his own token, which has like a piece of code in it, which when it took money through a certain function, it returned like only 20% of it back.
Okay.
So when you transfer token in a specific way, which people who front run used, so he just ran this token for a while, made it like very tasty for front runners, and they just like front ran it for a while, and like they gave him like 5,000 ETH or something, 500 ETH for that.
Okay. That's interesting.
That was fun.
Okay. Nice.
That kind of stuff works, but you see what skills you need to have.
But actually, I do think in the long run, decentralized exchanges will kind of like be bigger and bigger, just because. And this is one lesson I learned from finance, because what happens is like in finance, like even before the traditional market, there's many different exchanges, right, in different countries.
Sure.
But the ones that won is actually where it becomes a primary market for issuance, or basically if you're an asset. And the first exchange you want to list at generally becomes your home exchange. And that's the one where you get liquid at. So one thing that happened in the past, a lot of tokens, assets, they initially wanted to first list on Binance, or some central exchange. But now what we're seeing is that a lot of the newer token issuers want to list first on a decentralized exchange like Uniswap. And then the secondary listing is on a central exchange. So if that persists, then the centralized liquidity kind of moves to the DEXs for the newer tokens, and so over time, it should mean that liquidity kind of like transfers to the DEXs, as they get more mature. But it's probably going to take like the next 3 to 5 years for it to
it's going to be a process. The DEXs all have a bunch of advantages. I mean, I'm not a big fan of how the current financial system is structured. Like there is a lot wrong going on with banks, exchanges, government regulations and stuff. They're not very efficient. DEXs can do a lot better, and some things they are already doing a lot better, but they're still like technologically not sophisticated enough. You need a lot better like matching engine. You need better fees. You need better like trading infrastructure, like orders and stuff. You need better speeds, and also the regulators will try to take it away from you. So you need to figure out how to deal with that.
Well, I actually think that's exactly why decentralized, is always going to succeed, because it's basically the internet. Now that it's on the blockchain, you can't take it away, and so it doesn't matter what any regulator does. There's always be another Uniswap clone out there that is going to allow people to do swaps. But overall, I would say, having worked in traditional finance myself, what we're building in crypto is basically a better more free version of that.
Yeah,
and
I
so for
certainly
me,
hope so.
Yeah. Like the number one thing I want to see is Hummingbot to be just a part of that ecosystem, and we're an open source tool that just allows that new world of finance to actually become true and alive. So but I'm really glad we had this interview, because I think we share a lot of the same motivations and the same background in terms of why we're here. And I think the same exists for a lot of people in crypto. We're here to just try to build a better world that's hopefully more open and more free. So thank you very much, Eugene, for using Hummingbot, but also being part of the community. And I think that hopefully we'll get another chance to have a conversation like this soon.
Sure. Thanks, Mike. It's been fun.
Thanks.
Yeah. See you.